welcome back. The budget has had considerable emphasis on infrastructure, rural and roads. The big question that we're asking, however, is as this budget plays out, where is the impact going to be, particularly in the areas of tax and areas where individuals, whether it's citizens or companies, are impacted. I've got an interesting panel here. I'm joined by Ajay Garg, Managing Director, Equirus Capital, Umesh Revankar, Managing Director and CEO of Shriram Transport Finance, and Paresh Parekh, Tax Partner at Ernst & Young. Thank you all for joining us. So what we're trying to understand is that, this had many things. This budget had many things. There were some themes which were fairly clear. One was clearly support for the distressed agri-sector. One was clearly a very, very strong focus on investment in infrastructure. And finally, a lot of effort, or at least a lot of steps on the tax administration side, among other things. But the markets somehow reacted a little differently. There was panic almost in the beginning, and then there seemed to be a sigh of relief. Ajay?
Yeah, I guess so, because I think there was obviously an expectation in the market that government may tinker around with the long-term capital gains. And absence of that really gave a relief to the market. So, and that's a lot of the commentary we're hearing is that no negative news is good news. So I think that's what the market reacted positively.
Right, and we've also seen securities transaction tax being increased. So that did not affect negatively, you're saying?
It's not affected yet.
Okay. Why do you say as yet?
Because I guess people are still understanding the overall implication of it, and from an it's only for the options market. It's not there for the equities market per se, and it's something which we'll see a period over time in terms of what's the actual impact of the thing.
Right. Umesh, you do a lot of truck financing. Do you see, first of all, a correlation between increased investment outlay towards roads, which is clearly the case here, and your business and the people that you finance?
Yeah, there is definitely a link, because a good road is always shows the progress in the country, and logistic costs come down. The immediate benefit is the when road construction is on, nearly 10% of the total cost goes into buying of equipment, vehicles required for building it. So that is the immediate impact, and we'll be able to see that kind of a movement.
So what's been the impact so far? I mean, the government has been already investing, and the roads minister has said that he's pushing up investment, aiming to cover more number of kilometers per day. Is that already showing?
It is already showing. The heavy vehicle sales, if you look at the last 5 quarters, it is growing around 30% on heavy vehicles. And many of them are tippers, dumpers, which are used for transportation and the road leveling. Because earthwork, when you do initial earthwork, you require a lot of dumpers and backhoe loaders, excavators, that kind of activity. We are able to see that. And one of the demand which has come about is due to a mining transportation. That's a coal and iron ore in the last 1 year. But the road is also one of the major factor for many of the, especially dumper sales, to go up.
Right. Okay, and I'm going to come back on the rates of finance and interest rates. Paresh, a lot of things happened this time when it comes to tax and tax administration. The finance minister was also referring to a committee that submitted its recommendations, and he seemed to have accepted most of them. Take us to what it means on the overall sense, and then on the specifics.
I think it's a very interesting budget. A lot of expectations were met. A lot of expectations still don't find place. For example, Plan B of GST, for example. I would say there are a lot of googlies as well, because nobody had thought about an equalization levy, which is a new levy for online advertisements and services, and we'll have to look into the details, but that's a completely new thing at 6%. Second, I think not many people were expecting one more voluntary disclosure scheme. So another amnesty scheme at the rate of 45%, including tax, interest and penalty, may be not a bad deal. Then there are further areas which were expected, like deferral of place of effective management rules to help Indian outbound companies take a breather and arrange themselves to be compliant. Like, for example, country by country reporting of overall multi-jurisdiction data on employees, etc. All that was expected, which has come. And as you rightly said, most of the good Ishwar committee recommendations have found place in the budget. Overall, there are themes to minimize litigation, to reduce the penalty, I think it's a good thing to rationalize tax deduction at source rates. But however, there are googlies as well. I think rich people, or the so-called rich people, have been kind of asked to contribute more. Cars about 10 lakhs, I don't know why they are considered luxury, and there is a tax collection at source. Any goods or services which are bought in cash above 2 lakhs, there is a tax collection at source. The surcharge for income above 1 crore has been increased. So I think...
So when you say goods and services above 2 lakhs get another 1%, is it for all services, and what does it take the total service tax rate to?
So service tax, interestingly, actually goes up by 0.5%, which I think many people were expecting, because if GST has to come, the revenue neutral rate is definitely likely to be above the present service tax rate and most of the other excise duty rates. So I think that was expected, although they have called it, given it some other name. But I think that was expected, and it is creditable. So I think that is different, whereas I was talking about income tax rate of 1%, which is tax collection at source, which the seller of the goods will have to collect on behalf of the buyer. That is primarily aimed at reducing the black economy and to trace the people who are buying in cash.
Right.
But there are unique things as well. For example, I don't think the finance minister spoke about it. There is a incentive for diamond traders or diamond trading hubs to be set up in India. For example, they have expressly clarified that any display of diamonds happening in a specified notified area will not amount to a taxable presence in India. I think this is a step
So
to
which means it
promote...
won't be treated as an import and then an export.
Yeah, absolutely. So there are these unique things, unique concepts as well. I think...
But if you were to look back, and I'm going to put the question to all of you, is that how much of this is really correcting anomalies or correcting ways of doing things or really managing tax administration, or and how much of it is breaking new ground?
So a lot of us used to complain that it's not the law, it's the way it is implemented sometimes create problems. Today the attempt has been to remove or to iron out or to rationalize a lot of these irritants. And I would feel it is an incremental budget. Definitely some people were expecting a drastic reduction or at least across the board reduction in corporate tax rate, which has not happened. It is only there for new manufacturing companies set up and small companies.
Right.
So these things have not happened, but I think a lot of these incremental changes or rationalizing changes have happened.
Okay. Let me come to you. You know, the same question. If we were to look at the budget as a theme, are you seeing it as breaking new ground, and if so, where? Or are you seeing it more like a gentle continuation of what we've seen in the past budget?
When you look at this government in the last 2 years, it was seen as more of urban and pro-corporate. That's how it is viewed. I think with this budget, they have corrected that, and they have become more rural-centric. When I say more rural-centric, a lot of mention about removal of APMC Act, trying to have e-platform for transportation of trading, and the outlay of around 2,87,000 crores to directly to local panchayat bodies as a development amount. I think that is a very big move, and I think very bold move. And with this kind of a transfer of money directly to village level panchayat, so they are encouraging people to local level to take a decision on what they want, what they would like to build. It could be school, it could be road, it could be the tank. So I think this kind of this is a big departure from the previous budget. So I think, and even they recognize the contribution of the MG Nrega in spite of being really seen as a leakage in the past. But now they realized, because what has changed probably is the JAM Trinity, what they call, is Jan Dhan, the accounts, Aadhaar and mobile, and ability to transfer the money to the laborer or the employee who contributes directly. This gives a lot of confidence to the government that they can implement a lot of projects which are suitable to the rural. And when rural engages themselves what they need, then they become more passionate about it. Because if they build their own classrooms, will they build their own tank, the usage and the way villages adopt to it will become totally different. They will not see it as some government project. they will see it as their project
Right.
because they are implementing.
Right. So you talked about earlier about how increased investment results in more capital expenditure, and 10%, as you said, of most road expenditure will go into buying of equipment. Now, how much of it? I mean, most roads pass through rural areas, right? So do you see an impact there too? I mean, and what sort of translation do you see between the capital investment here overall on roads and equipment and let's say the lives of people who live in rural India?
It makes a very big difference because I have seen for the last 30, 40 years when I'm in the business, moment a road passes through a village, there will be transformation. The way their ability to transport what they have been producing there to the marketplace, and today mobile gives them access to the market, and even some villages are connected through internet to see what market needs and what they can produce in the villages. So a road gives them such a kind of access to the market where they become part of the economy, and they're able to get cash. So what is important in the rural area is they were not able to get cash. Whatever they were doing is more of a barter. I give this, you take this. And having a cash and ability to decide what they want to buy and what they can use it for, what kind of application they can put it for, is something give a lot of liberty and freedom to the farmer or rural people. I think a road is the best way to connect any rural areas to the...
And galvanize its economy. I mean,
definitely.
In connecting it and galvanizing
Galvanizes.
it. Yeah, right.
Yeah.
So Ajay, let me come back to you. So what's your sense? I mean, so we are where we are. I mean, after, after having lost as a market a lot of the gains that we sort of secured earlier, where do we end up? And what's your prognosis, more importantly?
Tough to always call because I think markets are not determined by a lot many variables than specifically only this thing. And I think increasingly we are seeing that the budget is becoming more and more of a non-event from a market perspective. And I think clearly the government has done a phenomenal act in terms of how they have tried to do many rural income with a specific focus on trying to increase rural income and without being populist. So it has sort of by keeping the fiscal deficit target of 3.5, send a very broad signal to the overseas investors and
But did you also feel that the fiscal deficit target was sacrosanct?
I don't feel that way. I personally feel that India is, given the need to grow income and the need to sort of do few things in that market, we can't be so sacrosanct about it. Obviously, we have that school of thought, and the finance minister talked about the debate that's going on in this country. So one is of the view of the thought that we shouldn't be so sacrosanct about it. But I think it's a little bit of factors which are contributing to the fiscal target from it, and which, depending upon how the variables play out, because last year, don't forget the fact that we had such a phenomenal boost because of the oil price reduction, and the government kept most of it with itself, with the 17 to 20 rupees hike on the diesel and petrol, which added a lot into the tax collection. And in case if the oil prices next year sort of increase by that, what will be the impact on the overall fiscal situation has to be seen. Is the tax collection target the government has. So those are the variables one needs to keep in mind. And I think with the focus on income, the 7th pay commission, the ORP, I think the consumption stocks, which we see, the FMCG, two-wheeler stocks and all, will see a phenomenal benefit from that perspective. That's the way we'll think about it. Right. It will give a boost to the consumption.
Right. And I'm going to ask you about, the finance minister also talked about listing the insurance companies. I mean, that's a fairly significant move.
Absolutely.
And it was not mentioned only in the context of raising capital, but also in the context of making them more accountable. What's your sense, Sanna? How do you read the budget overall?
So I think from a bond market point of view, I think the key variable for us was the fiscal deficit. So I think in equity markets, people can say it's not important. I think for us, that's the most important number. And from that point of view, given the kind of noises we were hearing prior to the budget, I think it was a big positive surprise, both in terms of the fiscal deficit number and as well as the overall borrowing number. And if you look at the assumptions behind the budget, at least on the taxation side, I think they've been quite realistic in terms of their assumptions. I think I can still see 3 stress points in this budget. One is the disinvestment target, as usual, is quite stiff. Every year, government aims for a high target and falls short. We have to see how they're going to manage it.
How much would you put the number if you included last year and this year?
This year it's 55,000 crore, right? So last year they targeted something like 70,000 crore, and they've achieved something like close to 15,000 crore. Of course, they're saying they will do something very much. and perhaps that number will be close to 30,000 crore. But even if they achieve 30,000 crore, it's still talking about doubling of the target. The second is, I think there is a pretty high estimate for telecom spectrum. So again, we have to see how that auction takes place and the health of companies in that sector, whether they're able to bid up the kind of amounts which the government is expecting. The third is on pay commission. I don't think they have made a full provision. The minister said he has made interim provisions, and our own estimate is roughly about half of what was recommended in that report they were provided. So during the year, if they decide to provide more, then that could cause some stress on the budget. But of course, we have to see what the government decides. I mean, it's a prerogative of the government to decide that maybe they will provide the balance in the next year's budget. So overall, I think given the kind of backdrop we were seeing, the kind of debate we had prior to the budget, I think it's a big positive surprise for the bond market.
Right. If I were to ask you about, how vulnerable we are as an economy today, particularly on the external front, do you feel that this budget in some ways fortifies us, or does it really move on like nothing happened?
So in terms of external vulnerability, I think clearly on the current account side, we are not vulnerable at all, thanks to the fall in commodity prices. The issue is more in terms of slowdown in capital flows.
But and exports,
But that is not specific to India, right? I mean, it's specific to all emerging markets, and India is suffering as part of that basket. But I think the broader point which the RBI governor was also making when he kind of argued against increasing the fiscal deficit is, I think, a couple of things. One is, I think there is very little proof that because government spends more than what they themselves have promised, growth is going to go up. I mean, last year also we saw that they kind of deviated from their fiscal roadmap, but ultimately growth didn't pick up, right? I mean, because of various other reasons anyway, growth didn't accelerate at all. So I think I think there's very little proof to say that if you exceed your targets in a given year, you're going to get a growth dividend immediately. I mean, over a period of time, because you're spending on infrastructure, it might come through. Right. But for a particular rate, it may not happen. And the second issue is, I think there is still monetary space available in India. So if the government sticks to the target and the borrowing program is reasonable, and as RBI cuts more, I think interest rates will come down more, and that will also provide a boost to the growth.
Right. So the finance minister highlighted the fact that, if you combine the total capex on roads as well as railways, it's more than 200,000 crores. Now that's a lot of money, and all of this is for just 1 year. What's your sense of how much will actually get transmitted?
Not all of that money is coming from the budget, right?
Sure.
So you have to look at budget and then extra budgetary resources.
Yeah.
So
including, he said, NHAI raising bonds and
exactly.
So on. Yeah, that's fine. Yeah.
So the point is we have to see how that plays out, right? So I think a lot of it is dependent on NHAI. Also, I think they are pinning a lot of hopes on NIIF, which is again a structure where the government puts in some amount of money and then you get external investors.
So my question is on how much of transmission do you see, wherever the money comes from? I mean, part of it will come from the budget, part of it will come from public, part of it may come from special institutions. What is the transmission and transformation that you see potentially?
So I think what we have to remember is if you look at this year's numbers in railways, for example, I think they have not been able to spend the amount which they budgeted. So I think there are issues in project execution still. So in that sense, I would be very surprised if they're able to hit the target which they're speaking about. I think even if they achieve something like 70% of what they're speaking about, I think that will be a good achievement. Umesh,
what's your sense? I mean, transmission, I mean, the figures is much larger than what it was last year. But can this actually go down, and can it move into projects? Can you see the on-ground impact?
By looking at what happened in the last few years, we are not seeing that kind of a spend coming from the government. We are not seeing the real cash coming out into the sector, and the developmental work is happening. Maybe because of the various structures within the government, bureaucracy, or the various approvals required from various government departments. That's creating a problem. People did talk about allocation as one of the issue, but the state governments which are very pro, which are able to allot the land, they're able to get things done. So land is basically a state government. So I think central and state government have good understanding, and good understanding between the department, and less of bureaucracy, and trying to create something of a single window program for many of these projects. That only can get your target. Otherwise, it's difficult to hit the target.
Okay. Let me come back to taxpayers. So let's talk about the individual. So again, a rash of small announcements, including a rebate, including benefits if you were to own a house or rent a house or buy a house and it's a low-cost house. How does it add up?
Sure. So before just getting into that couple of points on the earlier discussion, I think we'll have to accept that globally we all are moving towards a low inflation kind of a situation. And in India also, we are getting into that era. Another two aspects which are themes in themselves, the impetus given to employment and the impetus given for startups, and the UK has a patent box regime. So we have now something kind of Indian version of patent box regime where you innovate something and your income is taxed only at 10%. So I think these are also important areas. Now on individual front, there were a lot of expectations, to be honest. There were expectations at least there will be inflation adjustment done to the basic level of taxation. There will be standard deduction available for salaried class. There will be some other rationalizations around kind of overall increase in the interest on housing loan. It's not overall across the board. So I think on an individual front, I think there is a little bit of less populism which was seen in this budget. But I think, look at it positively or differently. I think we are underestimating the power of startups. You can today, as an individual, sell your residential property, and let's say you sell it for XY Z lakhs or crores. And if you invest that gains into a startup, you don't have to pay tax on the property. So I think clearly the government is sending a message.
But it also looks like a dodge, right, in some ways. I mean, how many people would want to actually sell a property and go and put it in a startup?
But what is the objective of the government? Let's look at that. The objective is to try and move the funds or the money from so-called real estate sector or physical gold to something which can
Financial
generate
investment.
employment. I think employment generation as a theme, where government is promising to pay 8.33% of the employment provident fund contribution for 3 years. I think it's not small. Second, any company, irrespective of the manufacturing or whatever, if the company is going to get a benefit on tax break for all the 30% of wages paid to new employees, I think it's not small. So a lot of focus is there, I can see, on job employment, skilled employment. Retail sector, I think, will also benefit a lot. I think the whole 7-day working concept, if states implement that, I think it will be a big thing. Similarly, the e-platform for agriculture produce and everything, I think those things will slowly show results.
Okay, but just to come back on the individual tax side, but there was expectations that exemptions would rise, isn't it?
So, no. So exemptions would rise. There was an expectation clearly. For example, as I told you, around deduction under Section 80C for investments, for the basic ceiling limit and all that. That has not happened. Clearly, that has not happened. But I think the whole focus was around reducing the corporate tax rate a little bit to what they can afford and taking away all the exemptions which are available for corporates or for businesses. So clearly, the exemptions for infrastructure facility, while he did not speak about that, clearly the exemptions about scientific research and development, they all have been phased out, either from some from 2017 and some from 2020 onwards.
Right.
So we are going to enter into a situation of low tax rate, but without any exemptions or benefits.
Right. So Ajay, can I come back to the markets for a second? So we are likely to see more supply of paper, particularly from the government, whether it could be the new issuances in terms of Life Insurance Corporation, General Insurance Corporation, or it could be existing disinvestment, though there's a new name for the department. What's your sense? Are the markets in a position, from your outlook as we stand today, in a position to absorb this form of paper?
So I guess last few months we have seen that there's been a pull out of the FI, which has obviously stopped, and you're seeing some of it really come back. So it's determined by a lot of macro factors, and I think India as an island stands out isolated in the where the world is right now, as the only market which is growing, have a very proactive government. Macro factors are coming into play, and the government is focused on the long term with the desire to build a competitive industry in the overall context. Given all those parameters, you would see that at some point in time, that India will start getting more and more allocation, and will be able to isolate itself from the emerging market pullout which is happening.
So you're saying foreign investors will come back, which currently they are not. I mean,
so so right now it's an emerging market pullout for the foreign investors. They're not looking at India at all in that pullout from that perspective. But I think given the fact that India is so different from the other emerging markets, we will stand out on that.
So let me put that question differently. So what did you feel that today's budget would give foreign investors that comfort to come back? I mean, I'm not saying budget alone is a magnet, but
because corporate earnings also have to happen.
Yeah.
So I think given the fact that the government is really focusing on consumption, trying to drive that, the spending which we're seeing in infrastructure, road and railways, the focus would keep the fiscal deficit target at whatever the government is. It gives all positive signs in that direction.
Okay. Umesh?
I think, as Ajay rightly said it, Investors have been looking for a budget which is very balanced. One is fiscal deficit is controlled,
right.
Plus the government's intention to execute things clearly visible. That execution was something which was not seen in a big way or in the right direction. So I think with this kind of statement made by the finance minister, and somewhere they are also trying to keep a achievable target. Maybe the announcement is big, but they are also trying to keep. The railway minister also, we observed that they are trying to talk about what is an achievable target. I think with this kind of a target setting within the government and government machinery, I think the foreign investors are likely to see it as a positive, and I do expect a lot of them to come back.
Assuming we get over the emerging market challenges.
Yes,
Right. Thank you so much. We need to take a break here, but coming up on the other side, we'll continue our coverage of the post-budget analysis. That's Budget 2016. Stay with us. Welcome back as we continue the post-budget analysis and discussions here in Mumbai. We've now joined by Raj Gala Shah, who runs a real estate company. So Raj, let me begin with you. We've already heard them. I'm going to come back to them in any case. What's your sense? What did you take away from this budget?
The budget, if you look at it, let's put in a very layman's term. It's like the Salman Khan movie, where you enter in with a lot of expectations, and then you end up with the very few bits and pieces that you like. If you look at it from a real estate perspective, I think probably the only cheer...
So is that how Salman Khan movies usually end?
I guess so. Most of us have high expectations. We go in there with the popcorn and the cold drink, and we are out with just bits and pieces that you end up liking. So let's look at it from a real estate perspective, because I would not like to generalize it.
Sure, go ahead.
From real estate, I think the REITs, the dividend distribution tax, I think is something that would really encourage them. Something that really would give a lot of boost to the commercial real estate industry. A lot of leasing is what I can see. As far as an individual home buyer is concerned, I think it's more like a medical aid policy with a lot of ifs and buts. I give you a 50,000 rebate, additional interest set off, but I don't think that is something that will really encourage him to buy.
Okay.
A lot of gaps. I think somewhere what needed to be done was there should have been more confidence that they could have generated, and they could have encouraged more investment. They're treating real estate or a home loan more like an expenditure rather than an investment. They could have actually encouraged the buyer to go in for a home loan, to make an investment, and let him feel that, okay, it's an investment and not an expenditure.
So can I take you a step backward? So what's your sense today? I mean, if you were to describe the health of the real estate sector,
right.
I'm sure that's a more Mumbai view, or a Maharashtra view, but how are things today?
See, today I'll tell you the main the mood around real estate is a little uncertain. And it's more so to do with policy paralysis. Now, with the financial impetus, if they could have actually encouraged home buyers to come in and purchase, it would have actually given the real estate developers and investors also some confidence looking at it that there would be an end user to buy. And there is some kind of a benefit that he is going to get, which I don't see coming up. With 30 square meters in Bombay is what they're saying is the affordable segment. We give you 100% tax concession to the developer. 30 square meters really in Bombay, 325 square feet. I don't think as a person staying in Bombay, I would want to buy a 325 square feet. It's a one-room kitchen. So I think somewhere or the other there is a gap.
Okay.
It should have been generalized.
Okay. Ajay?
So, I guess in the context of that it's a central budget and the way the government direction was going, I think the biggest benefit in my mind which will come to the sector would be is that having shown their discipline with the fiscal deficit, there will be a rate cut. And I think that one single factor which if suppose RBI follows in step with vis-a-vis what the finance minister has said, would make a big difference to the real estate sector, because I think the government was sort of, from all the messaging they've been giving, that they really want to go away from doling out from a tax perspective on things like this.
Sure.
So,
monetary benefit,
yeah.
I mean, or a monetary policy approach.
Yeah,
so it's a more monetary policy approach will affect the real estate sector.
It should, it should have. And, I think somewhere or the other, probably as they say, the intent is right, but the implementation is somewhere faltering.
Okay.
It could have been a more universal segment saying that 60 square meters, metro, non-metro, you create it, we'll give you tax benefits.
Right. So, President, I'm going to come back on the sort of country's balance sheet in a moment. But Umesh, what's your sense in terms of interest rates? I mean, how much of that? I mean, to what extent is it currently either helping you or not helping you? Where we stand today?
The interest cut in the last 1 year, around 125 BPS, did really help in easing out the interest rate burden. And
were you able to bring your own cost down?
Yeah, transmission to us, or rather another intermediaries towards the customer, to us it came to around 60-70 basis point. It did not flow in fully. I think governor is still talking about full transmission, only then further cuts. So banks are not able to really do it in a hurry, because they also have the other challenges which they have to meet. We have been able to pass on few, especially when the new vehicle buyer, they expect interest rate to be lower than the used vehicle. So we are able to reduce it on the new vehicle and increase the new vehicle advances. So wherever it gets passed on, it gets passed on to the customer ultimately. I think another 50 basis point is expected at any point of time, and maybe...
Yeah, some were expecting it today. It didn't happen though.
I don't think governor will act so quickly, but still 25 to 50 basis point is something which is expected in next couple of months. And once it comes and there is more pressure on the banks to pass it on, maybe the borrowing becomes much easier. Any single-digit borrowing, especially for home buyers, etc., single-digit borrowing will be mentally, you feel a little more comfortable. So I think once the banks reduces the rate, and post-April, banks also are going into a new way of looking at their base rate. There's a marginal cost of adjustment of cost. We do not know how the calculation is done, but I think around another 25 to 50 basis point from the bank is due to come for the borrowers.
Okay, Prasanna, if you were to put on a banker's hat, would that be correct?
I think that's fair. So I think both the points made is, one is because of the change in the way they're calculating, I think more transmission is going to happen. Whatever rate cuts RBI has already delivered, and we also expect a further 25 basis point rate cut. I mean, nominally we think that it will come in the April policy, but it's possible it could come before that also. Like you said, there is expectation in the market, both in the bond markets and the equity markets. So we think both because of these reasons, lending rates will come down much more than the 25 basis which RBI will deliver.
Okay, so that's good news. So let me take a step back again. So what did we, when we went into this budget, we went in with a certain sense of, with a certain set of numbers. I mean, both internal, external, state of the economy. Where do we stand today? I mean, take us through what it was before we went in, and what's changed, and how much of it is going to be in some ways more sustainable or more permanent.
So I think, like we already discussed, I think the external situation is pretty stable as far as India is concerned. I mean, even with all the turmoil in global markets and the pullout from EMs, I think India is definitely in a much better position. And hopefully once all this settles, I think money will start coming back to India. But I think the bigger issue was we talked about transmission not happening, right? So one of the reasons obviously is that banks, because of their own balance sheet issues or the way the banking system is structured, the transmission always lags in India. But also I think what we need to understand is that in the bond market also, after a point, the transmission kind of stuttered because the amount of supply of government paper. I think one of the popular misconceptions when people discuss about fiscal deficit is everyone focuses only on the central government, but you have to look at state governments also. So state governments also run up deficits equivalent to close to 3% of GDP. So center is 3.5%. So totally we're talking about 6.5% of GDP, which has to be funded essentially by and large by the banking and the insurance sectors, which means that definitely it will put a lot of pressure on interest rates. And that is the reason why, despite RBI cutting rates by 125 basis points, we didn't see government bond yields moving down commensurately. I mean, there was a move down before the rate cut started, but afterwards it kind of stalled.
Right.
And there is a lot of overhang of state bond supply, not only because of actual state government bonds, but also the restructuring of power utilities. Those bonds are also going to come into the system. So there was a lot of pressure on the system, and there was a lot of fear that if government also goes for a higher deficit number, it can actually lead to interest rates going up, and which will kind of completely negate the monetary transmission. So I think from that point of view, what
so
the
you think, you mentioned power bonds. You think that should have had a mention in the budget, or we've already factored it in?
So it is basically essentially being driven by the power ministry and by the state governments. So I think
And it's entirely off balance sheet.
It's off balance sheet in that sense. I mean, it doesn't concern the finance ministry per se. I think there what clarity markets need is that how the bonds are going to be coming into the market, whether banks are going to keep it in the balance sheet, whether RBI will give them some special dispensation so that they don't need to value it, they can keep it in the balance sheet for a few years, or whether they're going to offload in the market. I think that is something which the RBI has to provide more clarity on. So my whole point is I think this budget has kind of removed or reduced the overhang of bond supply, which was the biggest risk in the bond market, and to interest rates. And therefore I think that means that the internal stability also, I mean, we talked about external stability. I think the counterpart is internal stability also. Inflation has come down, but in terms of fiscal consolidation also, since the government is on the right path, I think in the future also the inflation expectations are going to be more stable. So I think the internal macro stability is also improved after today's budget.
Okay, so what's your sense on inflation if things go as they are?
So we think that inflation is close to bottoming out, but it's not going to go up much also. So we think around 5% to 5.5% is the broad range in which the CPI headline inflation should move over the next year. And the RBI's target is 5%, so we'll be pretty much close to that. So in that sense, we think that RBI still has some room to cut rates. But subsequently, RBI might be looking at 4%. And that will become more challenging. But of course, we can come to it later. I think for the current year, I think we are pretty much in line with RBI's target.
Right. And what about GDP overall numbers?
So we think there'll be some marginal acceleration. We look at gross value added because that is much more easier to kind of interpret and analyze also compared to GDP data. So in the current year, the government's estimate is 7.3%, and next year we think it will be between 7.5% to 8%. We expect some improvement to come from agriculture, of course, some improvement from consumption also once the pay commission payouts happen. Big question mark is about exports and investments. Investments on the private sector side, again, it's going to take a long time, I think, because both the private sector balance sheets are under strain and bank balance sheets also, I think it's going to take some time to repair. Exports, again, that's something which is completely out of our control. Hopefully, over a period of time, global growth picks up. The turbulence
So you're
in
seeing an
markets
uptick in
stabilizes.
agriculture because of the investment that we're talking about in the budget, or cyclical?
It's cyclical also. I think we do hope that after 2 years of rather uneven rainfall distribution, this year will be better. And of course, all these investments will also help.
Okay. Let me put a real estate question to you. So where are we in the cycle? I know you said that things are not good, but are we still trending downwards, or?
See, very frankly speaking, I really don't see that there would be any further downward trend. Most of the places, if you look at it, the prices have, I think, remained more or less stable. So I think there's a kind of a plateau that we have already achieved. Somewhere now, the only way forward would be upwards. Even if there is a kind of growth, as I said, in the prices as well, as he mentioned, it's the inflationary trend that will actually keep pushing the prices up. But if anybody is actually fearing the fact that real estate prices are going to be coming down now, I think that's a very far-fetched reality. Most of our costs, that if you look at it, are fixed costs, especially the government that takes a share. So out of every 100 rupee that we are spending, somewhere around, on an average, 37 to 40 rupees is what goes to the government. So that's a fixed cost. That's not coming down. As far as the remaining 60 rupees that we have in hand, we have to actually pay the construction, we have to pay the bills, we have to pay the salary. So there is a very thin margin that a developer today is working on. If we are looking at a price fall, I don't think that's in the near future. this is a plateau that we've reached.
Right. Ajay, if I were to ask you a more broad asset question, right? So we've talked a little bit about markets, but we've seen gold jump significantly, at least in terms of purchases. So more than almost $3 billion worth of gold were bought in the month of January alone by Indians, even while foreign institutional investors were selling in India. So what's your sense? I mean, which way are investors likely to go, or should they go?
So I guess, domestic investors would see equities as a big instrument to invest, because I think don't see too much of appreciation in real estate. And obviously you've seen that, that as an asset class has gone down in its ownership. You don't see, I think the interest rate, there will be obviously a downward trend. So obviously that much money which was there in fixed deposits and all will sort of, not an instrument to go for. And gold, I guess there was this temporary phase which, did see a slight correction in gold. Wish the government would have done more to discourage the investment in gold, because that's been the direction they've been saying this. But equity as an asset class will be something which, you could see more flows coming in. That has been back because you've seen the domestic mutual fund industry itself get around close to 70,000 crores in the first 9 months of this year, come down a little bit in January, but you see a positive flow out there. And I guess that sort of, is a bigger factor, that although there's been so much of money that has been pulled out, domestic investors coming into equities has kept the market at a reasonably high level.
So you're saying you're still betting on equity versus most other asset classes?
Absolutely.
Prasanna, what's your sense?
So I'm in the bond market only,
Yeah.
so maybe I should say it is bonds.
Sure, yeah.
So I would think that with this kind of supply overhang, that fear has gone away. So I think you can look forward to some capital appreciation in bonds also this year.
Okay, but do you see, for instance, in investors, I mean, do you feel that they're likely to change the way they look at other asset classes in the coming year? No, I mean, if you look at it trend-wise, it's really been real estate and gold. I mean, I mean, my question really is, are we seeing the shifts, if any?
The shift has happened, because, if you sort of
Significant shift.
Significant shift, in my mind, has happened over the last 5-7 years. If you see the trend in terms of what used to go in gold and real estate and equity mutual funds, as that definition itself, you look at only this three, because you get concrete data on those 3 data points. And if you sort of, look at what has happened with the domestic mutual fund in the last 3 years, vis-a-vis what's gone into real estate or gold, obviously very difficult to itemize that, because, there's a real estate which is always something which is being also done from a consumption perspective. And there's a real estate from an investment perspective. So if you have to keep those two separate, then I guess you would really see the shift has been happening, and it will be more and more there. Because, one thing which, we talked about the fact that real estate prices are not corrected, whereas an equity price corrects and gives an opportunity for the investor to buy. And so I think that sort of the direction move there.
Right, and you feel that the budget could have done something, Ajay, in that regard?
So I think government has done what it could do in terms of their hour. The only piece where you think, it could help further growth would have been if the bank recapitalization could have been much more number, because with 25,000 crore, it's an insignificant amount given the requirement the public sector banks and others are having right now. But in line with the way the RBI was sort of trying to tighten the belt out, there would have been a contrary message. So we think that that's the only piece you feel they could have done. Plus infrastructure spending, we still think that 2,20,000 crore vis-a-vis the type of growth rate we are targeting is not enough.
Yeah, I mean, I think the roads minister himself has talked about a $1 trillion ideal situation. What's your sense? I mean, so the numbers maybe on relative terms appear strong, Umesh, but should we have bet on even larger growth numbers, or investment numbers?
Definitely yes, because India is much behind in the infrastructure creation. If you look at 1960s, what happened in US, and 1990s, what happened in China, the kind of investment they have made is huge for the infrastructure and linkage, for whether you call it as a coal linkage, whether it is a port linkage, whether it is a Sagarmala project. All those things we have been talking for 2 years, and it is getting postponed. So I think there should be more clear execution plan on when we have to complete. Even the DMIC, we are not seeing the end, when it is going to complete. So this gives an impression that India is not very serious on infrastructure. Because unless we plug the infrastructure loophole, India is not going to have a Make in India concept. Because Make in India, India's logistics cost on the final product or anything what they produce is 13 to 14%. Whereas global developed countries, it is around 8%, and China it is 10%. So we are having a 4 to 6% disadvantage. plus our interest cost is high. So with so much of disadvantage, what will you produce and sell to the world? So I think this basic disadvantage has to be plugged by higher spend on the infrastructure and quicker execution. So somewhere I think still we are lacking behind in creating the world-class infrastructure, which will make people. One thing is, see, manufacturing gives more employment, and every government should focus on creating more employment. So the manufacturing is still not in the main agenda of the government. It is what it looks like.
Despite Make in India and everything?
I think so. Long way to go.
Because there's no mention of, because one sector where there was a lot of manufacturing discussion was defense. And clearly you still struggle out where the allocation for defense or where it is the amount. There was no mention about it.
But is it to do with allocation, or is it to do with friendly policies which allow, let's say, creation of joint ventures, foreign direct investment, liberalization?
So I guess, you also have to look in the context of the fact that, the government needs to build its own capacities too. And I think that's where the spending has to happen. The government will be the biggest buyer of all those. So if the spending has to come from the defense budget, then where would that happen? Obviously, it will be something which will be implemented or executed through a joint venture. But what's the spending outlay we are talking about? Yeah.
Right. So Umesh, I mean, just to come back, I mean, if we said that, okay, you dream like a dream of a China-like situation where you're, pumping billions and billions of dollars literally every day. What are the gaps then? I mean, I think you mentioned it earlier. You talked about, delays in land acquisition, maybe the actual rollout. Obviously, the PPP model came into a lot of stress. If having learned some lessons there and having now greater ambitions, what do we need to do right?
I think the renegotiation of PPP, which is mentioned in the budget, is one right step. Probably we were too exorbitant earlier in either getting a project or trying to get out of highly leveraged projects. Now I think renegotiating and government participating in it, because we did talk about hybrid, we did talk about different models of operating, where the equity of the infra companies can be rolled back to them, and so that they can invest back. So many things are there. I think there should be something. Now when renegotiate PPP, I think we may get some clarity. There could be some public debate and some help required for each of these infra companies how to probably execute the project or bid in the first place properly. So once that is done, I think because India doesn't have a world-class executors as far as infra is concerned. Otherwise, government has to become very efficient in EPC projects. So government can become very efficient by getting the best of consultant and brains. And that also can happen, because in the railways it is proven that government can execute, especially the first start with the Konkan railways, then the metro. If one person can do, there could be many people in the,
within both the Delhi Metro and the Konkan Railway is the same person.
Same person.
Yeah.
So I think government can try out EPC in a big scale also.
But in some ways, this budget also seems to be pointing in that direction. It's really public spending which is going to drive capex in a very Keynesian way. Am I right, Prasanna?
Again, I think you have to make a distinction between what the government is spending and what is coming from extra budgetary resources. So you look at the 2 lakh crore plus number, it looks big, but not all of it is coming from the government. So I think if really government wants to spend more, they should look at cutting subsidies. I think this is something, unfortunately, I think that debate, I think now nobody wants to enter that debate, because politically it seems to be very difficult to touch food subsidy or fertilizer subsidy, right? I mean, we were lucky because of global events, oil subsidy has come down, but there are still 2 big items which can be better targeted and I think can be reduced also with better outcomes, right? But they have not tried doing it now. I think at some point of time,
the government is trying to plug leakages, which is another way of saying that can I manage my subsidy?
I think it's going very slow. I mean, direct benefits transfer was first talked about by the previous government, and I think we are 4 years down the line, and still we are running pilot projects. Right? I mean, I understand it's a complex thing, it involves a lot of execution and all that, but obviously that is where they have to get their act together, and I think they have to speed up that
And this budget has also talked about additional in fertilizers, introducing a direct benefits transfer. Right. Okay, so we're running to the end of the show, so I'm going to ask you all for hits and misses. Right? So Ajay, shall I begin with you?
I guess in my mind, the government could have done much more in terms of tax simplification with the direction they took. We still think, that the whole TDS and the advanced tax, allows the government to have so much of tax refunds which they will pay later, is something which I think is missed out big time.
Okay, that's your miss. Any hits?
I think the government has hit well with spending a lot and keeping the fiscal deficit target.
Okay. And do you feel comfortable now that the economy is on a steady track for the rest of the year?
I guess it's if you sort of look
or you
at
would hope for continuous interventions.
So if you look only from budget as a target, as an event in the messaging that the government has done, it has told what the corporate sector could expect from the government, and I think that's a pretty consistent with what the messaging was been going for a while now.
Right.
So I think it's good.
Raj, what's your hit and what's your miss?
The hit, I think, would be the REITs. For the REITs, the dividend distribution tax. I think that's a good encouragement because we need to get money into the economy. We are like a loss-making company if you look at it in other ways. This will really help out leasing and as well as the commercial leasing as well. So that was a hit, definitely. In terms of a miss, I think they've lost the opportunity for affordable housing. They could have given it a boost because of the terms and conditions that they have implied. As far as 60 square meters as a cap, then there has to be also a completion within 3 years. If they had to do away with that, I'm sure that would have been a hit.
What's your ideal size if you were to peg it?
I think a 60 square meter is fine, but it should have been 5 years for completion of that project. And also, it also needs to have what is the kind of
60, which is twice as what the government is.
Exactly,
Okay.
in the metros. So instead of differentiating between metro and maybe the MMRDA area or the metropolitan region, they could have just had it a flat 60 square meters, which is a 650 square feet, which is a very decent area. And also with the 3-year completion clause that they've come with, I think it should have been 5 years, or it should have been the square feet area that needs to be completed within 2 years.
Okay.
Because projects could range from a single building to 5 buildings to a 100 building complex.
Okay.
So you can't just term it in 3-year period. It will take time.
Okay.
So that's somewhere where they missed. I think they could not define it well.
Okay.
They could have defined
Anything
it
on
better.
the consumption side, on your ultimate on the purchaser?
Purchaser, I think what they could have done is they could have given him a better tax set-off instead of a 50,000 thing. I think it's just to make him happy. It's like a consolation gift that they've given a consolation price. Take it and be happy. I don't think 50,000 really matters now, and it's not going to really push up the demand or make anybody feel better. It could have been better. It could have been more confident enough. They could have made it maybe at least 2 lakhs. They could have. They haven't. So they missed it.
Okay. Prasanna?
So
Hits and misses, yeah.
hit, of course, is the fiscal consolidation. I think 3.5% is also a fairly large number. So I think we shouldn't trivialize that number and say that, government is not spending enough. The misses, like we discussed, the subsidies, I think they could have done more. I think, in fact, I was expecting on food subsidy at least there'll be more concrete steps announced to bring down that number and make it more efficient. Hopefully, by next year, maybe the DBT is in place and they'll be able to do more on that.
Right. Anything on the structure side, on the market structure in terms of hits? You did talk about bond market and...
Yeah, so I think there was something about encouraging more retail participation. Now, I think this is a goal all governments have, but I think bond markets worldwide are institutional markets. So I don't think it's going to be that easy to get direct retail participation in bond market. I think it will happen more through mutual funds. So in that sense, they're trying to make an effort. I think you have to give them credit for that, but I'm not sure whether they will succeed with that.
Okay. If I were to ask you for the one new idea that you think or you felt you should have, they could have brought in, what would it be?
We already discussed about the subsidies, right? So on the banking recapitalization, I think we were earlier, when we went into the budget, we were looking at a higher number, assuming that if the banks have to keep providing more and more for the NPAs as the year progresses, because RBI is going to continue with the asset quality review. So they have clearly provided 25,000 crore, which means that I think the government is actually going to distinguish between some of the stronger banks and weaker banks. So I would have liked them to provide more clarity. I think consolidation is a pet theme of finance ministry, across governments, right? Which is fine, which is fair, right? So I would have liked to see some more clarity on that and some kind of a roadmap on that. And I think that would have made a difference in terms of signaling to the markets.
Right. Umesh, last word.
I think the biggest hit is the rural plan, rural spend, e-platform, NGNREGA, all the rural and even irrigation they are allocating. All this focus has been really good, which was missing in the past. And probably the biggest miss should be the bank recapitalization. I expected FM to announce that weaker banks could be merged and there can be a fewer bank and they will capitalize. If there's a roadmap clearly mentioned in the budget, it would have been much better, so that there would have been clear roadmap on how the foreign investor can come and participate in Indian economy. Now, there is still vagueness on, because PSU has been giving 70% of the loan for most of the project. So if they are not having enough money or enough capital, where the money will come from for the most of the PPP project and the infra project. So that question mark will remain. So till then, I think foreign investors will be little wary on this aspect.
And lastly, one idea that you feel we could have introduced?
Probably, I don't really have immediate, but I think in the income tax part of it, I think he could have come out with more rationalization rather than still keeping on that old deduction, subtraction, that kind of a thing. He could have given a clear roadmap.
I mean, things are happening, but we are clearly getting impatient.
Yes,
I mean, that's really the
yes.
thing. Great. We've run out of time. Thank you so much for joining me. We need to go in for a break now, and coming up on the other side, we continue with post-budget analysis. That's Budget 2016. Thanks for watching.